Hello, and welcome back to Forex Neuron. Today we're breaking down the four biggest markets in trading: Forex, CFDs, crypto, and stocks. What they are, how they work, and how big they really are. So let's dive in.
So what exactly is Forex? And why is it such a big deal?
Let's start with Forex, short for foreign exchange. It's the global market for trading one currency against another, always quoted in pairs like the euro against the US dollar. Here's how it works. You buy one currency while selling the other, and you profit when the exchange rate moves your way. And it is massive. Forex is the largest, most liquid market in the world, with over $6 trillion changing hands every single day. It runs 24 hours a day, 5 days a week, flowing across the Sydney, Tokyo, London, and New York sessions. And most traders use leverage from a broker to control a position far bigger than their own cash.
Wait, what's a CFD? I keep hearing that.
Next, the CFD, a contract for difference. This one works differently. A CFD is just a contract between you and your broker to exchange the difference in an asset's price from the moment you open the trade to the moment you close it. The key point: you never actually own the asset. You are purely speculating on its price. And that gives you two powers. You can go long, to profit if the price rises, or go short, to profit if it falls. You can trade almost anything as a CFD: Forex, gold, oil, stock indices, and more, usually with high leverage. But remember, leverage magnifies your profits and it magnifies your losses just as fast.
Okay, but what about crypto?
Now crypto, short for cryptocurrency. This is digital money that runs on the blockchain, a public, decentralized ledger with no bank and no government in control. Bitcoin was the very first, and Ethereum is the second biggest. You can send it anywhere in the world and trade it 24/7 all year round, even on weekends. The entire crypto market is worth roughly $2 to $3 trillion, with Bitcoin alone making up the largest share. But be warned, crypto is famous for wild, lightning-fast price swings. The reward can be huge, but so can the risk.
And stocks, how do those actually work?
Finally, stocks, also called shares. A stock is a tiny piece of ownership in a real company like Apple or Tesla. When you buy one, you literally own a slice of that business. You can make money two ways. If the company grows, your shares rise in value, and many companies also pay you a share of their profits, called dividends. Stocks are traded on exchanges like the New York Stock Exchange and the Nasdaq during market hours. And the scale is staggering. The global stock market is worth well over $100 trillion, and a single giant, like Apple, can be worth around $3 trillion, all on its own. So let's bring it all together. Forex, you trade currencies, and it's the most liquid market on earth. Stocks, you actually own a piece of a company. CFDs, you speculate on price with leverage without owning anything. And crypto, decentralized digital money that never sleeps. Four markets, four very different games, each with its own rewards and its own risks. Follow Forex Neuron, and we'll see you in the next lesson.
Whoa, now the difference makes total sense.